Hello, everybody, and welcome back to my channel. This is part two of a two-part series where I just go over some price action, looking at my strategy, TCLM, trend continuation, liquidation, mitigation, a very, very simple, powerful, mechanical approach to trading day in, day out throughout the market opening times, but primarily with the high success rate during London and New York, but obviously during lull times, pre and post London works fantastically well because the framework is mechanical. There is no subjectivity, and the premise is basically that we are trying to cast the wick of the following candle, basing our behavior on the previous candle in anticipation that the trend would continue. So we are positioning ourselves early on, trying to cast a wick to ride that trend either throughout the day, either throughout the session, or just for a fixed 2 hour or 3 hour. So let's get to it. Let's look at London on 3rd of June, first of all. There. Okay, so London is happening. We have a strong, clear trend to the downside. We had this nice, strong bullish candle to the downside. I did not get an entry within this candle itself to catch this candle right here. I did not get the entry there. So what happens? Nothing. You move on and you put the box around the next candle. And I'm looking for sells on the back of this trend, hoping for this trend to continue. What do I want? I want liquidation. Price came in, it broke this low, so we have more downward trend confirmation. Came back up and has a very strong push away from this zone. For sure, there are orders left behind. Look at that pull away, and this is the wick that on seconds time frame is an order block. We had another break of structure. We have a clear liquidity sitting at the top of this high, which was responsible for all that downward movement. What am I waiting for? I'm waiting for a liquidation, I'm waiting for a mitigation, and I'm waiting for a reaction. So once that liquidity got taken out, I could have placed a stop order at the breakout of this candle. I wanted to be a little bit safe, so I said these two are closed. Let me put a stop order at the breakout of this candle, so I'll have two lows broken. And then I placed the stop at the high of the zone very safely in 3.8, and what did we end up with? An easy 2-hour trade. Okay, so the first trade, this is the big giant bearish candle that I'm looking at. The minute this printed and moved on to the next candle, I marked my red box and I'm eagerly anticipating a trade setup. So what do I see here? I see price moving upwards. This high did not break any low. Nothing happens, no reaction. So if this got taken out, it's weak liquidity. I don't really care. So what happens next? This high breaks this low and then it gets taken out. Fantastic. Price keeps moving upwards. Then we have another liquidation over here. So at this point in time, we have two liquidations, which is even better. And none of these liquidations gave me an entry before we mitigated the zone. So we went up, mitigated the zone, and then instead of waiting at the breakout of these candles, because the candles are too tiny, and we've had multiple liquidations and we've had this entry, and I did not see this, so we did have this entry. So one of these liquidations is gone. We catch this liquidation and see what happens. I was waiting for a reaction candle just for an extra confirmation, right? So I placed a stop order at the breakout this bearish candle, and then I placed the stop at the top of this high because if my analysis is correct, this strong high should not get broken, right? This I'm anticipating at this point in time because a new low hasn't been created. So with this reaction candle, I'm anticipating this is a strong high that will create the new low. And if this breaks, my entire premise of the trade is wrong, and it's probably looking for a deeper mitigation or a change of trend. So I placed the stop loss, and that was again an easy 1 minute, 2 minute, 3 minute, 4 minute, and 5 minute 2-hour trade. So let's put that in there. 2-hour. What happens next? And I keep continuing following the direction until the direction changes, or I get evidence, or I get stopped out. So next candle comes in. The inside bar I'm going to ignore, and I'm looking at this bearish candle right here. Yeah. So I play this candle. So I place a box around it after this trade, which is this box here, and I'm waiting for the new trend to develop, or I'm anticipating the trend to continue, and I'm waiting for the trade to develop. So broke to the downside, bang, soft weak high. I'm anticipating it to react. Obviously for this zone, it does a reaction, comes back down, gives me a reaction, gives me an entry, and I'm anticipating that this is strong high, which will give me a lower low based on this 15-minute candle, because the trend is already on 1 minute downward, right? So when this entry set up, what do I need? I need liquidation. So first thing what happens, price goes up. This high is responsible for breaking this low, and then it gets swept. I'm waiting for this sweep to happen, liquidity grab, then I'm waiting mitigation to happen. This is the zone, very clear zone. Mitigation is there, and I place a stop order entry, placing my stop at the top of the zone. Why I placed at the top of this zone is because if I place it right here, it's a 2-pip stop. If a 2-pip stop, 1.65, but you're asking for spreads to take you out. You're asking for higher commissions. I don't do anything less than 3 pips at all. So yeah, it made sense for me to cover this high. And once I got in, I broke structure to the left side. I already was 1 hour up. That's when I go to break even. And once I am broken even, the trade took me out. So no problem. My capital is preserved. The entry was there according to my rules. And this was a break-even trade, no problem. We just move on. So fourth on EU, number of trading opportunities. This one, a nice strong bullish close. There was no liquidity taken. I could have entered on the supply and demand battle, right? Who wins? With the anticipation that the trend would continue upwards, but there was just no clean price action. I mean, if you are risking your capital and you want to get entry, there are enough opportunities where you would get a clean setup, where your eyes will just naturally gravitate. Oh, there's a setup there. It's part of your subconscious. Why would you want to force an entry in this garbage over here, right? Just leave it alone, let it go. You probably could have had multiple entries over here as well, right? All of these wicks are mitigating something in the previous candle where then they're bouncing off, right? So let's leave that one alone by itself. This candle right here, so this bearish candle, why did I get involved in this bearish candle? The reason for that is that we are in an upward trend, but look at this, how overextended this market is. We have 1, 2, 3, 4, 5, 6 15-minute candles going and trading upward without breaking the lows, a very solid strong trend. And then what do we see? We see a bearish candle close, right? A strong bearish close. Now with this, what I'm anticipating is that it is a pullback, because I'm not going to challenge the larger trend. But typically when you have such a strong trend and you have a bearish candle, your next candle is also bearish. Sometimes what happens is you have a strong bullish move, you have a pause, and then you have another bullish move, right? Bullish move, pause, bullish move. But in this case, I was waiting to see if an entry happens. If an entry happens, I'm hoping that at least runs 1 hour, so I could be at break even, right? And not risk my capital. But I've seen this enough that I was confident in taking this trade, and if it is clean. So price come up, it gives me this zone, right? Price came in, price expanded, came back into the zone and expanded more. This gives me a nice strong high to get liquidated. Once that got liquidated, tongue twister there, I could have placed a stop order right here, yeah, and that would have been an easy 2.4 hour or almost a 3.67 trade, 3 hour trade. But like I said, this is too small of a stop loss for me, 2.4 hour. Plus, given that I'm in a bullish momentum, I want to see a little bit more confirmation. So in this case, I waited till I got here, and then I placed the high at the strong high over here. And this was again an easy 2 hour trade, or I would have been a break even. Let's move on. New York on EU, there was no trading opportunities, none whatsoever. So I can go over this with you. We have a nice large bullish candle. Now with this size of a candle, yes, our framework tells us that you just keep following the trend until it tells you that it's over. But I mean, majority of the time, what are the chances that this will continue? With such a giant move, this is probably a news thing. There will be retracement, right? So when this happens, I'm really not interested. I'm really not aggressively looking. So, and again, this is garbage. Very corrective price action, no liquidity taken. Yeah, it's reacting from the zone, but yeah, for me, this is something I want to stay away from because I have such clean setups to enter on. That why would I risk my money on such garbage setups? So let's tally. 1, 2, 3, 4, 5, 6. Not bad. 6-hour trade right there for 2 days. And if you were to tally the 7-hour from GU, we are looking at a total of 13 or 2 days. Let me write this down for you. We are looking at 13 or 2 days. GU/EU, London and New York only, with mechanical entries. How easy is this? All right, guys. I hope you picked up something from this. If you are interested and want to learn more on the strategy, do join my Discord. I do a daily markup over there. I have hundreds of markups already for the month of May. Join my Discord, like and subscribe, and we'll catch you on the other side again. Take care. Bye now.